Scope of tax. The scope of tax under this decree law defines the range of transactions, supplies, and activities that are subject to taxation within the United Arab Emirates, UAE. The application of tax extends to both domestic transactions within the UAE and cross-border imports, ensuring that all relevant economic activities are covered. The detailed provisions are set out as follows. 1. Tax imposition on taxable supplies. Domestic supplies made by taxable persons. Tax shall be imposed on every taxable supply made by a taxable person within the scope of this decree law. This includes a. Definition of taxable supply. A taxable supply refers to the provision, sale, transfer, or supply of goods or services made in the normal course of business activities, where such goods or services are subject to tax under this decree law. B. Who is a taxable person? A taxable person is any natural or legal person who conducts business and is registered, or required to be registered, for tax purposes in the UAE, either due to exceeding the mandatory registration threshold or opting for voluntary registration. C. Types of taxable supplies covered. Tax shall apply to a broad range of transactions, including but not limited to the sale of goods for consideration, the supply of services for consideration, leasing or licensing goods or property, any other transaction that qualifies as a supply under this decree law and is not explicitly exempt. D. Taxable events triggering liability. Tax becomes due when the supply occurs, as determined by the date of supply rules specified in the decree law, which typically relate to the transfer of ownership of goods, the completion of service provision, receipt of payment, in part or in full. E. Geographical scope. Tax applies to supplies made within the territory of the UAE, including free zones to the extent specified in relevant legislation or the executive regulation. 2. Tax imposition on deemed supplies transactions without consideration. Tax shall also apply to every deemed supply made by a taxable person, even if no direct payment or consideration is received. This covers a. Definition of deemed supply. A deemed supply occurs when a taxable person uses or transfers goods or services from their business for personal use, non-business use, or free distribution, where these goods or services were originally acquired for the purpose of making taxable supplies. B. Examples of deemed supplies. Tax may apply to transactions such as giving away goods as free promotional gifts, transferring stock or assets from the business for private use, providing employees with business assets for personal use without charge. Other non-commercial or internal transactions that are considered to fall within the scope of deemed supplies under the decree law and its executive regulation. C. Reason for taxing deemed supplies. The intention is to ensure that goods or services originally acquired with the intention of being used for taxable purposes remain subject to tax, even if they are later diverted for non-business or personal purposes. D. Exceptions and exemptions. Certain deemed supplies may be exempted or excluded from tax, subject to specific conditions set out in the executive regulation. This could include low-value items or minor employee benefits. 3. Tax imposition on import of concerned goods. Cross-border imports into the UAE. Tax shall also be imposed on the import of concerned goods into the UAE, unless specifically exempted under the executive regulation. This includes a. Definition of concerned goods. Concerned goods refer to all goods subject to import tax under this decree law when they enter the territory of the UAE, regardless of whether they are for personal, commercial, or industrial use. B. Who is responsible for paying tax on imports? Tax on imports shall be the responsibility of the person legally responsible for the import, which may be the importer of record as recognized by the customs authority, Any other person who assumes responsibility for clearing the goods into the UAE. C. Point of taxation for imports. Tax becomes due at the point of importation, typically upon customs clearance, unless a different mechanism, such as a deferred payment scheme, is allowed under the executive regulation. D. Imports subject to tax. Tax applies to a broad spectrum of imports, including raw materials, finished products for resale, capital goods and machinery, consumer goods for personal or business use. E. Exceptions and special cases. Certain categories of imports may be exempt from tax or subject to special rules, including diplomatic shipments, goods imported under temporary admission procedures, goods specifically exempted under the executive regulation. F. A customs and tax coordination. The Federal Tax Authority, FTA, works in close cooperation with the UAE customs authorities to ensure that import tax is correctly calculated, collected, and reported. 4. Legal reference and supplementary rules. A. This article must be applied in conjunction with related provisions in the executive regulation, which provides more detailed rules, procedures, and exceptions relating to the scope of tax. B. This article confirms that all taxable transactions, both domestic, taxable supplies and deemed supplies, and international, imports, fall within the tax scope, unless expressly exempted by law. 5. Importance of compliance for taxable persons. A. All taxable persons are responsible for understanding which of their transactions fall within the scope of tax. B. They must ensure that they register for tax if required, correctly calculate and charge tax, maintain proper records for all taxable supplies, deemed supplies, and imports, submit accurate tax returns and pay all tax due in accordance with the deadlines specified in this decree law. For more details, contact us.